before we get started?
First of all, Kimber, thanks a lot for having me today. Appreciate it. And Plaza's super happy and excited to be partnering with NAMB this year. It's going to be an interesting market. We've obviously seen, rates go up, low inventory, but I'm sure we'll get to that in a little bit. So, Jeff Lynan, I've been in the mortgage industry about 30 years, almost exclusively wholesale correspondent, tiny little bit on the retail for a little bit of my industry. I worked for some really big banks. I was at Chase. I was at Washington Mutual, in a different world before '08. Joined Plaza in 2008, right when the financial crisis was kind of a smack in the middle of it. So kind of an interesting time. It was great to work with a non-bank lender. We were able to maneuver through the financial crisis and come out on the other side super strong. So I love what I do. I love helping small businesses. I love helping mortgage brokers grow. And continue to work in their business. So super excited to be a part of it. Plaza is a great company. Been around for since 2000. Just celebrated a little over 20 years, and we continue to still have a branch network and people out in the communities serving our mortgage broker partners.
Yeah, thank you, Jeff. I appreciate that. I'll say I've been with Plaza. I've been a broker that's been using Plaza for over 12 years now. We're just talking about that a little bit before we came on the show, and I have been a little over 12 years with Plaza. So, and that tells a little bit about where we're at right now. First thing I want to ask you, my question is the second home and investments. What's your thoughts on that? What happened? Where did it come from? And why is it happening? And what's Plaza doing? And how's the Plaza adjusting to this? And what's your thought on the market? And what's going?
It's interesting. Obviously, the FHFA came out, told Fannie and Freddie they need to get their deliveries at 7% or under. My understanding is most lenders, and when I say most, around 60% of the lenders out there are delivering over 7% right now. So that's obviously a challenge for them. And those are why you're seeing kind of a disparate treatment of LLPAs. For those that are way over, they've got to carve that back pretty quickly. Those that are slightly over are figuring out what to do, and those that are under are, trying to make sure that they don't go too far over. So, it's interesting. I think that the market eventually will absorb at least the investment loans. These are great borrowers. They're low LTVs. They perform really well. And I think that will create a situation where they'll be able to deliver these investment properties at roughly the same LLPAs that we saw on the agency side. I think that will come around eventually in the next couple of weeks as we sort through everything. Second homes, probably going to be a little more expensive as we go forward. But we'll see. Time will tell, and we'll have to see kind of how it shakes out. Clearly, we're generating more than the 60% right now, so we'll have to see what happens.
Yeah, we're seeing. Down here. We're in Florida, and down here in Florida, South Florida, I don't know how it's going to affect our market. I'm already starting to see. Yesterday, the same client backed out of a contract that had a second home we had it priced at 3 and an 8, and we. 25% down, 800 credit score. Turns around today and calls me and goes, "So what's my rate today?" And I'm like, 3.5. And he's like, "How did that change in a week?" And I had to explain, and I think there's going to be more of that. Why it's not a huge dramatic shift. It's still wonderful and great rates. And I priced some investments yesterday. They're around 4% for an investment property. It's still a knee jerk that people are going to have to get used to, and people don't understand the market. And I don't know how it's going to affect the market and if it's going to slow it down, especially investors. My concern with that is, if investors are paying higher prices, that means they're going to charge more for the rents. They're going to be more pickier where they are. Right now, in a post-COVID atmosphere right now, people can't afford the rents and stuff that they have. So what is that going to put? Is that going to displace people? I hear the side that, that's going to be first-time home buyers. It's going to be great for first-time home buyers because it's going to give more inventory for the first-time home buyer. I don't know that I see that, because I think the investors that's buying those properties are not buying them, like the first-time home buyer would buy them. So I think we've got to catch 22. I'm hoping it'll level out. I'm hoping we'll see some adjustments as we go down the road, because it could be a hurt on the investor side. for our first-time home buyer, but also for the renters. And then for the second homes, a lot of these people are buying their second homes to retire and to move, and people understand. And the money and their cash, this is retirement, has already been stripped with other things. So this it's going to be interesting. We're going to have to flow with it and see what happens.
Yeah, I mean, bottom line is we need more housing inventory, right?
Yeah,
We
right.
need more housing inventory. So
Yeah, and I think that was a part of it. Next question, what's the best way to approach realtors and differentiate yourself in this post-COVID market? I mean, you know, it's a refi boom. We all got survived through refinances. You know, thank goodness the market held. You know, became lowest rates we've ever seen. I've been in this for 33 years, and I don't remember the last time I've seen these rates this low, but over 20. Now, rates are up. You know, everyone's on the street. Everyone's a mortgage broker. Everyone's a realtor. You know, how do you differentiate yourself? How do you now shift? What you say is a suggestion with Plaza. How do you shift to a purchase and adjusting your way of doing business and realtors?
So, you know, it's interesting, you know, as I mentioned, one of the things I love is working with small businesses and brokers. And it's tough because brokers are business owners. They're trying to originate, they're trying to process, they're trying to close, they're trying to do all this work, and it's tough. So I think one of the things they got to do is really understand the needs of the realtors. It's different today. They're in competitive. You have to, one of your jobs as a broker, I think, is to support your borrower and get on your selling agent's team and figure out, how do I present this person to the seller and the listing agent in the best light? You know, it's a team sport now, because you know, there's people are fighting for properties, and you've got to get on and figure out, how do I support these people? So I think realtors' needs today are different than they are in a traditional purchase market. So as a mortgage originator, you need to sit down and figure out and talk to the realtors and figure out, hey, what's your needs today? What can I do to assist and help you? It's not just about the lowest rate. It's about other things that I can do. It's about product variability. If I'm a realtor and I have a listing and I'm not selling it today, there's probably a problem with the property. Maybe I have avocado appliances. Maybe there's an issue. Maybe I need a renovation loan, so that when the borrower, you know, gets to the end, you know, when the borrower looks at the property as completed with the renovation things that we like, they'll actually get a higher price for that listing when they sell it. So there's lots of things to do, but you've got to have product variability, and you've got to understand the needs of the realtor.
Yeah, I think you're right. As a producing broker, which, you know, gives me a unique advantage, even as the president of NAMB, is that I am a broker and I am producing. And what I've seen, number one, for me on my side, I will not deal with a wholesaler that can't meet closing dates with my realtors. I mean, you know, I have seen in this pre-COVID refinance world that, you know, lenders were not putting the purchase business first. And that's one thing I will say about Plaza through the whole process, is you put your purchase business first. And that's what we need to remember, is that's what we build our business on, all of us. Refinance, I call it, you know, the gravy on the mashed potatoes. You know, we're lucky we got a refinance boom. We're able to refinance. That's wonderful. Those come once every few years. But what is there is you continue realtor relationships. And I was out there and I was seeing, and we were hearing that, you know, 75, 80% of some of these brokers' business was a refinance. And you didn't keep a good manner of that. So which means if you did not stay in front of your realtors and your partners during this refinance boom, and if you did not deliver, you're going to have a hard time, because there's those brokers that are out there that had worked with their lenders. And I think you've got to also notice that, hey, we can do a 203K, we can do this, we can put them in this. You know, I just had a borrower who said that, you know, I don't have the money to buy something, but I want this house. And she goes, I wouldn't mind having rental income. Well, why don't you do FHA duplex over 550 up to 515? You've got 20% to put down, but you want to renovate it, so put some money into it, or do an FHA 203K or 203K. You've got to have more tools in your toolbox. You've got to know your products. You've got to be able to show the realtors the value of what you have. Because if you don't, you're just another broker among or a loan originator among the many that's out there. You got to set yourself apart, and you've got to be available. You've got to set your standards as to what you want and your availability, and what does your realtor want. My philosophy has been, my 33 years, I picked 10 realtors, a total of 10. Of those 10 realtors, that's it. They've got, that's all I deal with. They have to produce. I have to at least get 8 deals a year from them. If I don't, and they have to be quality deals, if I don't, I go to the next realtor. I have people waiting to become my partner. I'm not trying to say that, but I do, because they know I deliver, and I make sure I deliver for them. And it's just a good core to grow. And it takes a while to grow that. But if you can grow a base of 10 to 12 good realtors that you have realtor partners with, you don't need anything else. And that's how I build my business.
Yeah, no, I've worked with you before, Kimber, and one of the things that amazes me is how you stand up for the service that you offer. And you're like, I'm good at what I do, and I need a commitment from you, and I will work with you, but this is what I need in order for me to use my talents with you. And it's great.
Right, and it is a partnership. What you just said, no matter what lender you go with, it's a partnership. Plaza, and that is something that, and I'm not honing Plaza, but that is something I have learned with Plaza. It is a partnership, and that is what you have to have, because your partnership includes your AMC that they deal with. It includes your title companies if you have any choice. It includes your realtors. It includes your lenders. It is a relationship building thing. One thing breaks in the chain, you end up to lose that partner.
Absolutely.
And the next is what changes should you consider in your approach as a result of low inventory?
So I think a couple things. One is, you mentioned the AMC. Are you working with a lender that's dealing with regional AMCs, or are you dealing with someone who puts it out to bid to the lowest bidder, and figure out who they get? With Plaza, we work with regional AMCs. I think the other thing is speed. And when I say speed, I don't mean hours. I think we're getting a little silly sometimes with what we talk about in our industry. I mean, quickly, day and a half. And finally, are you working with seasoned, experienced people? Is my account executive, my underwriter, do they know a lot of product? Are they experienced in what they do? Can they help me with any problems that may arise during the process? I think those are all super, super valuable and important things.
And I agree that the speed, doesn't mean, in my opinion, I have to have my loan approved in 24 hours.
Right.
I have to have it clear to close in 10 to 12 days. It means, is it done efficiently? Do the conditions come out looking like they came out of a horror story? Or are they actual conditions that are reasonable, common sense underwriting and can make sense? And the fact is your lender that you're dealing with knowledgeable? And have you actually educated your borrower in this low inventory? And have you went back to the old day, and I call it with the low inventory, of common sense, understanding that you're out there competing with everyone out there, and what you've got is your word. And I've always said, do not overpromise and underdeliver. It's better to underpromise and overdeliver. You always look like the star. And that has always been my philosophy of how I deal with business. And I use what someone said, when my grandmother always told me about bad news or telling someone. We all know there's that loan that or that realtor, we got to go back and tell her we can't get the loan done, and how we do business. My grandmother says, the longer you put that, she would say, that spilled milk, that spoiled milk back in the refrigerator, the worse it's going to smell. And I think that's something that we do, is we seem to, as a broker, I just can't go tell Sue that her client's not going to get the loan. So we wait till the day before commitment and say it's not going to work, instead of going back and saying, how can we make it work? And working with the lender partner to say, can you restructure the deal?
Right.
That is important with whatever lender, and that's one thing Plaza does well. They are there to restructure and work with the deal. I've had many of those, and come back, hey, can we do this? Can we restructure? And and with the low inventory, that's how you have to rethink. You have to make sure you're there, and you have to be aggressive at the same time, but understanding that it's not like on to the next deal, because there's plenty of us competing in the next deal. So it's definitely, and the AMC is very important regionally. I've not heard in the past how many times, well, Joe came from the other side of the state and didn't know my area. And that's true. And that's one thing we'd say, do we have an AMC? Do you have a relationship? Does your lender have that quality relationship with the AMC that they can go to bat for you? So I think those are a lot of the things that we have to do during this. That's a different approach during here. Instead of just saying, oh, whoever it is, we're going to send it, we'll get it closed, we're good. And it's speed. When I say speed, it's like I close it, they underwrite it. The thing is, what kind of relationship are you building with this low inventory?
I think it gets back to basic business. No surprises. Users don't want surprises, especially at the 11th hour, but throughout the whole process. So what can I do to make sure to eliminate any surprises and I can deliver what I say I'm going to deliver?
Yep.
And who am I working with to ensure that that happens? Because there is a lot to do during the process.
And well, down to the next one we've asked, what do you do of all these things mean in terms of who you do business with on the wholesale side?
So, that's an interesting question. I touched on a little bit about for what I really think Plaza represents, which is no surprises. We have seasoned staff. Our average AE has been with us, 5.5+ years. They're seasoned, they're tenured, they know what they're doing. Focus on working with people that have that experience and can work through problems that may arise during the process, because there will be problems. Purchase loans happen. I think you have to over communicate as a lender and as a broker. We have to make sure that we're all communicating, that we're stressing everything. It's really about ease for the borrower too. Am I working with someone who's doing e-hybrid closings, RON closing? Those are going to become the standard of our industry, and borrowers need to have these options today. And then finally, product options. As you mentioned, if appraisal doesn't come in as is, do I have renovation? Do I have government? How low a FICO do I go? Do I have these options that I can get deals done without having to repackage and go somewhere else? So between product options and having all that available, I think you need to pick your lender really closely. The other thing too, we never touch on is, the regulatory environment going forward, most likely, it's going to be very different than it has been in the last 4 years. So are you working with someone who understands that, values it, and is trying to work to make sure that you also stay out of trouble with your state regulators? I think that's really important.
And I think to touch on that, that's exactly, the regulatory environment has changed. I've been preaching this every week. The CFPB has teeth, they're sharp, and they're back. And the regulations are back. We went from left to right to middle. Now we're back to, it's tough, the law is the law, the rule is the rule, and here's what it is. Most small brokers don't have time to worry about the big stuff, which is why that we should have our wholesalers to work with us to make sure that they're compliant. It helps keep us compliant, make sure that we're sending the right disclosures out. And that is something I do like about Plaza. We're there, they're making sure they're working with us, they're making sure that our I's are dotted and our T's are crossed. And that's the type of wholesale partner that you need to work with on the compliance and the regulatory side. And I think when you're looking at a wholesale lender, it's not all about price. It's a combination of all, but it's about a partnership. And not that you're a number and you're running through the highest numbers and you're getting the nice little award sent to you every year because you're a highest number. Yeah, that's nice. But what is nicer is to know that you have a partnership and you actually build a relationship with that wholesaler and those AEs, and you're not a large number. And I think that's what Plaza does. Next one, how can we get us brokers reach the millennial market as first-time buyers?
So I think it's really important for brokers to understand, first of all, that millennials want to operate a little differently, most likely. They want to text, they want a POS system, they want to maybe work differently than sitting across from a desk with you, even in a COVID environment. So I think it's important that you have those tools to make sure that you're working with them that way. Make sure you're helping educate. Most of them haven't been through this process before. So take the time to educate. Don't assume that they know what they're doing. Keep your reviews up. Millennials look online. They're looking to see, and if you don't have a robust, then offer, other reviews. Your realtor obviously will be probably the best source of referral sales. So I think when you combine all those things to make sure that you're just treating that market different, and it is the fastest growing home buying segment. So we need to make sure that you're aware that it's going to be a slightly different transaction. I may have to invest a little more time. I may have to ask some more questions. I may have to make sure that they fully understand exactly what's going on and what's to be expected during this process.
And I think for me with the millennials, it has been a boomer I've had to come into technology. I hired a millennial. That's the other thing I would tell those of us that are boomers. You know, if you have got you're old timer like I am, and I call myself that, hire a millennial. Hire someone to work with you. I got a loan officer assistant that I got licensed, and he's licensed, and he has taught me, and he's 26 and he's opened up so much. But hire someone to enhance you and to help you with that actually can speak the language and makes you understand. The fact I also understand about the millennial, everyone says they all want technology. That's true. They all want to text, push a button, but they still want that hands-on, be able to pick up the telephone, be able to call you when they have a question. So it's a combination of both. I think that the ones that are saying, and that's the boomers are just saying, we're going to just do the old school, and then the millennial brokers, younger brokers, are like, oh, we're going to text and email everything. I'm finding out through the millennials, it is a combination of both, because
Correct.
you know, it's like, I want you there when I want you there, and I just want to text you when I want to text you. And you have to learn when that is available, and you have to adjust, and you have to adapt to the climate. The millennial is a different group, but they're loyal, they're good, they know what they want, and they're house buyers, and they've done their research, like you just said, on their broker. And there's not always about rate for these people. It's about what you can do for this, what lenders, who you send it to, what wholesalers, what am I going to get out of it? Are they servicing my loan? They're going to sell my loan. You know, it's lots of these technology questions that we're like, oh, how does that affect your loan? They're just inquisitive. They're knowledgeable. They want to know.
I think it's as if they were going to work with a financial advisor or going to a doctor. They want to know they're working with an expert. And so they're going to go online, they're going to research, they want to know that they're working with somebody who is an expert in their field and can guide them and make sure that they're going to get everything done the way they want to get it done.
Yeah, I agree with you.
Yeah.
Next, jumbos. Are they back to stay? Or where are we at? Are we just dipping the toes in the water? I'm seeing several lenders going into jumbo now. You know, it's still conservative in my opinion. What do you see for jumbo, and where's Plaza at with jumbo?
So I think the jumbo's here to stay. I think, you know, as we come out, assuming we don't have any other significant COVID setbacks, but I think that, you know, we've got our first product out, came out fast. We got a tremendous pipeline in it already. We have a second and possibly even a third product coming online very shortly. We'll continue to expand our guidelines, and I think that, you know, there's definitely a need for it. You know, price appreciation is coming. There's, you know, people are, as we talked about earlier ago, people are bidding up prices left and right because of the shortage in inventory. So there's definitely a need for this product. And I think you continue to see it expand. And again, this is one that you really, as a broker, want to make sure that you ask the right questions. You know, is my lender delegated with these products? Are they doing the underwriting? Are they doing the closing? Do they have to send it out for a second review? Like, make sure you ask all those questions, because it's really important when it comes down to delivery that you're working with the right lender with this product.
Yeah, I'll just say I've ran the nightmare of and I'll say it, in the old days of having to send out for second review, or we have to send it out to the investor, and the investor is a big bank. Yeah, Jeff's right. It's who, how do you know how to do it? What are they doing? Are they delegated? Are they in-house? Are they able to do the products? And what kind of relationship do they have with the investor? I think that means a lot when you make that decisions. Question that's not on here, but I am going to ask you for today. With the chance of the lower credit scores, the first-time home buyers coming out, we're the first-time homeowners, stripped of capital, stripped of equity. We know that home ready, home possible, 97%, unless you have over 700 credit score, it's just not going to happen. It's throwing people into FHA. The people with the 600 and above got very limited, even under FHA. They just really got kicked to the curb, except most of the 640. I'm starting to see some people come back. Oh, I'm going to have lenders that are doing them, but they're not doing them well. You know, you might as well sit there 60 to 90 days to make a close. Is Plaza coming back into the market with FHA with lower scores?
Yes, we're coming back down to 600 very shortly here. And I think that that's a market that needs to be supported. And we need to continue to support these home buyers with products like that. So we'll be slightly higher for renovation products, but we'll be down to 600 very soon. And, you know, I think one of the things that makes our company so valuable is our seasoned, experienced FHA underwriters who know how to really get in and tell a story of an FHA borrower. Because that's what it is many times, is a story. So we need to make sure we tell that story and get that loan packaged and presentable so that we have a saleable loan product and we can get our buyer into their home.
And I think that's very important right now, especially with COVID. There's a lot of people that aren't, because they have a 600 credit score, that they're bad people. They've had challenges and they have the ability to pay, but FHA is the bucket they should be in, and that they can afford. And it's just been such a minute group of lenders that's allowed this. And when they did, their overlays were crazy. And that's one thing I know about Plaza, and I've liked about Plaza, is that they write to the guidelines. There's not a lot of overlays. It's very few overlays with Plaza. It's right to our guidelines, and that's something that I've always liked. So I'm glad to hear that from Plaza coming back into the market with 600. You've done a great job with it before. Hope more people open that back up. Is there anything you want to ask me before we get ready to close up? Anything else you want to ask?
Well, I mean, Kimber, you've been a huge loyal customer of Plaza's forever. I mean, you talked a lot about us, and we appreciate it. My sales background always tells me that it boils down to trust and enthusiasm in everything that we do. What drives you to work with Plaza as much as you do?
I've been with Plaza almost 12 years.
Yep.
As in one of my buckets as one of my preferred lenders. What drives me with Plaza is I had the opportunity many years ago to be chosen and go out there for a broker roundtable. I was a new broker with Plaza. I'd been in the business 33 years, but I hadn't really been getting back into the market. And Plaza brought me out, and I met the two owners, and Kevin Parra and James Kutry. And I met your team out there at the time. And it was like a family business when I went out there. It honestly was like a family business. It was like I call myself a boutique mortgage broker that, I'm not big. I'm not ever going to be big. It's not going to happen. I've been down that road with 50 brokers and don't want everyone to go back there again. I'm too old for it. And it's just, I don't, but it felt home. It felt common sense. And the more I developed the relationship, and I tell people, and I joke about it, I'm a prima donna loan officer, and there's many of you listening to me today that are out there, and you know what I mean. We produce, and we expect to be treated with the royal red carpet, and we gripe and we complain, and that's what we do. But we deliver, and we deliver. We want a partner to deliver back. That's all we ask for. That's why I've stayed through the years with Plaza and been one of my partners, is I go with people, price, service, common sense underwriting, deliver, and come through. And consistently over the years, everyone misses the mark. We as brokers miss the mark. But consistently over the years, Plaza is one of those, still has not lost who they are, what they are, that they're there for the consumer. If I've heard it once from your owner, I've heard it 20 times from Kevin. We are founded on purchase business. Purchase business makes our business. There's very few wholesalers that continue to preach that preach. And that is something that I appreciate, because I keep 60 to 7% of my business is purchase overall. And when the market's slow, I keep it up. I don't worry about it. And purchase is my bread and butter. And that's why I take care of service, common sense underwriting, ability to talk to the underwriters. There's lenders that you'll never get to talk to your underwriter unless they call you. That's not Plaza. Having this team of management that works. And there's a great team here in Jacksonville. And this isn't a sales pitch. This is honestly truth of what I know I get from Plaza. And I get it from other lenders too, but that's why I've had 12 relationships with Plaza, and it's appreciative. And we all know that things aren't always perfect, but that's the difference. When people make mistakes, you're open, you're willing to listen, you have your ears open, and you're appreciative of it. It's not like, oh, he's just talking at me. It's they want to find solutions. Plaza wants to make things better. Plaza wants to make sure that you're satisfying the industry. That's why I stay.
Yeah, that's great. No, I couldn't think more. I would just overlay we've got this experienced team, and I think that's enables us to be able to help you and support you and do all those things. So we appreciate it.
All right, we appreciate it. NAMB, appreciate you being on my first show today as a guest. Look forward to every week having someone learning about the industry, helping you out in your industry. This is what I've always wanted. NAMB's always here for you. If you're not a member, go to NAMB.org and join. The benefits that you get with NAMB, the benefits that you get being a NAMB member are worth the $150 that you pay. If you have any questions, I'm always available. I appreciate it. See you next week. And Jeff, thank you very much.
Thank you, Kim. I appreciate it. Thanks for having me.
Thanks.